Anything that you've read around the Chinese individual behavior, investors' behavior? I know Indians are buying. What about China?
So, as of now, the demand is from central banks. Chinese retail is, I believe, a small part of the overall scheme of things. It's more the central banks and then the retail. India is bigger. India is 20% of world gold imports. World manufacturing per annum, whatever is manufactured, 3,600 tons. India imports about 750 tons a year. Indians have been kind of steady.
Yeah.
They've not really increased. In fact, imports are down from 2010, 11, 12 to what it is now. So I believe the drivers are more central banks and then retail comes in. But I have just one more important point to make on how gold works on the Indian markets. I think we have a big impact of gold on Indian markets, unlike any other country in the world, because the stock of gold we hold is almost equivalent to our GDP or market cap. No other country has this setup. Total stock of gold in India is about 35,000 tons, which is $3.5 trillion. That's our GDP. That's about our market cap. So a gold rise actually leads to a wealth effect, which doesn't happen in any other country. And the data I've analyzed over the last 25 years, after a 30% rise in gold, which has happened multiple times in the last 25 years, Indian markets tend to do well. The average small cap index performance was 25% per year after a 30% rise in gold versus long-term average of 15%. And of course, I don't have too much data because Indian rupee during the last bull market between 2000 and 2011 was flat, while gold had a 7x rise. So, but that's only one cycle. I would want to watch how it did this time, how will it do this time. But apparently, India does well when gold rises.
Let's hope that happens. Naresh, one final takeaway, because Dr. Yarini has given his. I'm not asking you to make a prediction, but are you constructive gold for somebody to looking at this show right now? Good to go out and invest in gold, your hypothesis?
So I would view it more as, at least as an insurance.
Of course.
Portfolio insurance.
Well, which is a given.
Yeah, which is not always, I think, a given, because at some times gold underperforms. It's a drag.
But Naresh, 15 years, Sensex and gold prices have nearly matched returns, right? So data shows that it's a given. Whether people do it or no is separate, right?
True. So good point. I think that that also depends on your starting and ending points. Between, let's say, 2010 and 20, gold underperformed massively Indian markets.
Okay.
So all this long-term tracking is because gold has done well recently. Long-term things look good. But yeah, I'm constructive. I think there are a lot of tailwinds which are playing out for gold. Gold moves in very long-term cycles. At best, at the minimum, it could be an insurance, but I think it could be a very good portfolio diversification and addition.